After breaking a 2-month dry spell with a new record high last week, the tech-heavy Nasdaq, which has fallen 4 days in a row, is once again underperforming the broader market on Thursday as a slew of tech earnings fail to impress Wall Street, scaring off institutional investors while at-home traders double down on the frothy market. When the history of this bubble is written, it will go down as one of the largest transfers of wealth from the public to insiders in history, Deluard said Wednesday, noting that stock prices have almost doubled in the past 12 months and pointing to an unprecedented $105 billion poured into exchange-traded funds over the past 8 weeks. The only precedent in history for such a rapid doubling in stocks took place in the aftermath of the Great Depression, Deluard notes, adding that a 40% correction quickly followed. Stocks are in a holding pattern as investors search for the next inflection point while stretched valuations provide very thin air cover from tape bombs, Crisafulli said Thursday of the market's recent tepidness. Earnings were great but the season is over, growth is booming but also possibly peaking, and the stimulus surge from President Joe Biden's rescue bill in March may be winding down. The Dow and S&P keep nabbing new record highs this year, but not without bouts of volatility. Intensifying an end-of-week sell-off, Dallas Fed President Robert Kaplan said Friday that he thinks the Fed should start discussing when it will stop buying $120 billion in assets each month to help prop up economic growth, a practice that helped the Nasdaq more than double in less than a year. The Fed insists it will continue the purchases until the economy reaches full employment and inflation exceeds its annual 2% target, but experts can't agree on a timeline for those goals. I think we're going to reach that benchmark sooner than I would have expected in January, Kaplan said Friday. Crisafulli believes the Fed could start the tapering discussion at its next Federal Open Market Committee meeting in June, something that's sure to test the market's strength at a time when stocks, and particularly those in tech that skyrocketed during the pandemic, are increasingly sensitive to the Fed's moves. Tech stocks tumble after sudden trading slump. Here's why experts are worried the weakness could continue. Forbes, tech stocks like Tesla are screaming for a correction. Here are the ones most at risk. Forbes.